Mohamed, this week alone, we got Le Pen, Mélenchon off the table. We got something resembling a tax rollout. We got pretty good corporate earnings. We got a diminished risk of a government shutdown, and yet the 10-year yield is crept up 6 basis points. David Rosenberg last night said no one believes the inflationists anymore. Is that true?
Yeah, I think, Carl, you speak to something really important, which is navigating these markets. You have to deal with massive contradictions. The first one is what the stock market has been telling us and what the bond market, the treasury market, has been telling us. The second is what soft data has been telling us and what even today's hard data has been telling us. Third, yes, you've removed the immediate systemic risk of political shocks, and we would have had a political shock had Mélenchon and Le Pen made it to the second round, but you haven't removed this anti-establishment movement. Remember, the two candidates going to the second round, none of them are from the mainstream parties. So the market is trying to deal with all these contradictions, and there's one good way of dealing with them is to get the policy actions that will validate the stock market, that allows for an orderly normalization of rates, and that overcomes political issues. That's what we need, is progress quickly on implementing pro-growth economic policies.
Let's talk about trade policy for a moment, Mohamed, and the potential to hurt global growth. Clearly, there's a sigh of relief today in the markets. The Canadian dollar, the Mexican peso rallying on the idea that the Trump administration won't immediately withdraw from NAFTA. Increased trade protectionism. Broadly speaking, is it bullish for the dollar or bearish for the dollar? How do you play that?
Well, first of all, if it were to happen, I don't think it will happen, Sarah. I don't think we're going to end up in a major trade war. But if it were to happen, it would be stagflationary. And that's the worst combination for the markets. Lower growth, higher bad inflation, that's not what the market needs. So the first thing to recognize is if it were to happen, protectionism would be really bad for the stock market. It would be bad for the bond market as well. So that is really important. The currency, my own gut feeling is that at the end of the day, the dollar does better in this world. It's a relative price, and the US economy is more closed, more self-sufficient. But what we heard this morning about NAFTA is important. I don't think NAFTA will be eliminated. I don't think we're going to end up in a trade war. I think that's all elements of a negotiation to update, to modernize some of these trade agreements.
Yeah, we're just getting used to having it all done in public. One last question, Mohamed. In light of what Draghi said today, has the policy divergence trade among central banks, has that trade peaked?
I think so. You know, it was really interesting, and it explains the roller coaster that you've seen in the euro. It was really interesting because the first half of his statement was all about lower downside risks and improving economic data. And you cannot deny that the economic data have been improving in Europe. And then he went very dovish on policy, very dovish, given the facts on the ground. I don't think he's going to be able to maintain that. I can understand why he wanted to get through this meeting without causing major ripples. We still have the French elections coming up. I don't think he wants to be a political football in this environment. But I don't think he can maintain this uber dovish stance given what's happening on the ground.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.